Graveyard shift. Thank you for listening. I apologize in advance. I have notes. My wife can testify that I can't speak for 5 minutes in my wedding speech without notes. It was quite embarrassing. You are an intimidating crowd for a VC. First up, I'd like to thank Arjun and his team for putting this together, not least because of what this event represents. I think it implicitly implies that VCs do actually compete for your attention all the time, whether we like it or not, and that's not actually a bad thing. It reminds us all that the very best entrepreneurs, teams, and businesses have a choice when they raise capital and deciding who to work with. Selfishly, today has given me the chance to learn from my peers around me, those that you've already listened to, and more importantly, it gives you the opportunity to find out more about those individuals and what their firms represent. I think this format also adds a decent dose of humility to this dynamic, the VC-entrepreneur relationship. VCs spend most of their time being pitched to, and it can have a tendency to create a false sense of confidence, if you like. Some would call it laziness, arrogance, or worse. On the contrary, I feel incredibly humble speaking to you today, not least because of the experience demonstrated by the other VCs that have spoken, but also because I've sat exactly where you're sitting. I can't claim to have built $1 billion business. I haven't even built $1 million business, but I do know exactly what it's like to give up a stable and secure life to pursue a startup, and more specifically what it's like to try and raise investment funding. I admit that when I started I was incredibly green, but I did end up raising an angel round. I did build a product. Unfortunately, that's about all I did. But for me, this early part of a startup life was what taught me the biggest lesson and continues to influence my approach to investing. Namely that it's all very well being passionate about your startup from the get-go, but inspiring and motivating those around you is probably the most difficult and ongoing task you'll ever have to achieve. As you know, it starts with finding a co-founder and continues with finding investors, employees, advisors and early customers, and persuading them to join your journey and not someone else's. I also learned a huge amount about myself, and namely that I'm probably too pragmatic to be an entrepreneur. Most of you might think pragmatism is a skill that you need as an early stage founder. Unfortunately, I didn't have the, unlike Steve Jobs, I didn't have the benefit of a reality distortion field. And when I decided quite early on that we hadn't gained enough traction, I decided to give nearly, more than half the money I'd raised back to my angels. Needless to say, most of the successful entrepreneurs I know would have spent every last penny and more trying to prove their suspicion wrong. So for me, this represents a 6-year journey from startup founder to VC, and I feel very privileged to have the opportunity of speaking to you. The strapline of Arjun's event is, or Capital on Stage, is demystifying venture capital. I'm not sure I can even begin to do that justice in 5 minutes. I'm still learning myself. But let me tell you more about what we do at MMC. We're a London-based fund investing in early-stage, high-growth UK businesses. We've been investing now for 10 years. I'm one of 5 partners. We're 9 people in total. We manage committed capital of 100 million, and we invest about £15 million a year in new and follow-on investments. We're very comfortable investing in both B2C and B2C opportunities, and focus on software, e-commerce, and digital media. Mobile and fintech are also overarching themes, and we're comfortable, again, in both the business and consumer markets. We have 2 sweet spots in terms of stage of investment. We actively invest in Series A transactions where we can invest between £1 and £3 million, either on our own or alongside co-investors. And what we call, or what I call pre-Series A, where a business has early revenue and commercial traction and is looking for sub-1 million pounds, in order to prove out their core business metrics before raising a larger round. Once we've invested, we're very comfortable supporting a company through several rounds of funding. Bloody hell, that 5 minutes went quickly. Recently, we've invested as little as 250K in an early stage round through to participating alongside 3 other investors in a $20 million round. Let me skip to the end. If you'll allow me, I'd like to extend some advice and a small word of caution to challenge your thinking on what probably sounds like a lot of talks today that sound fairly similar. I have many good friends and co-investors in the venture capital community, and I haven't yet met 2 teams that are the same or even remotely similar in the way they think, operate, advise, and work with their investee companies. My advice is simple. Work with people you like and those that you trust. Spend time getting to know them, go out for dinner with them, and almost certainly speak to the teams that they've invested in. I promise I'll finish now. For me, on a more personal note, I genuinely love what I do, and the market we operate within. It's by far the most difficult thing I've ever done, and yet I still think you guys have the most difficult task of all. I hope we sound like the type of people you'd like to work with, and if so, we'd be very keen to hear from you. Thank you.